We will start the presentation. Hope it is audible to all. So in this presentation, I have divided into two parts. Initially, we are going to see some data related to our domestic economy, which is doing relatively well when compared to other global markets. Whereas global markets, if you see global economy, I mean, there are some issues. Many economies are slowing down. US, some of the lead data indicators are showing some slowness has come there, where housing data and all, if you look, means we are going to see some sharp slowdown in the US economy in coming months. So I have divided the presentation into two parts. We will see one by one. So our markets are relatively doing well. Even last 2 weeks, if you see, there are even though the indices has in major indices has in gone up, it is going up and down and remained range bound for the last 1 month for last 1 month. But if you see the broader market, there are select pockets which are doing very well. Actually, in this market, many retail investors could be able to make decent money. They can easily outperform the index because a lot of individual opportunities are available. For example, if you take this defense theme, most of the stocks are doing well. Even among defense team, if you take the shipbuilding companies, which are lagging for the last 2-3 years, they have suddenly started going up vertically. So like that, lot of opportunities are available in the market. Even though if you take the index, it is range bound. And if you see global markets, most of the markets are very weak. And if you see US market, Nasdaq is down by more than 30% from the peak, and S&P more than 20% from the peak. That means it is in a bear market. Any market which is down more than 20% means theoretically it is in bear market. Similarly, if you see European markets, there are a lot of issues are there. 2 weeks back, we had issues with UK, where their bond prices fell very sharply, which led to some issues with very old pension funds, and UK government has to interfere into it through their central bank. So like that, many issues are there. Global markets are very weak, and even yesterday, if you see that US market overnight fell very sharply. So one of the reason why yesterday US market fell was that the jobs data which came yesterday was very strong. That means that US Fed will go ahead further with rate hike. That is why US market fell yesterday. So good data actually is very bad for the market, and vice versa. Suppose if bad data comes with on that day, market used to go up. So like that, US market is functioning. As I said in last meeting, that any central bank has two objectives. One is to keep inflation low, and the other one is to keep unemployment low. And if you see yesterday, unemployment was very low in US market. It fell further to 3.5% against expected 3.7%, which means that the mandate for the central bank now is to reduce the inflation, which is at a very high level. So without worrying about the economy, they will go ahead with the interest rate hike so that economy will slow down and the inflation will come down. That is why yesterday US market fell. And if you see foreign institutions, they are very cautious. They are very cautious globally, as well as in India also they are very cautious. After 1 month of buying in the month of August, September they turned against sellers, and in October, one day they are buying, one day they are selling. Like that, it is happening. And whatever I am getting commentary from most of the foreign institutions, they are very cautious. They want to enter into the Indian market because the opportunity is very high, but they are very worried about the valuations. They feel that valuations is very high, and they want the valuations to come down to enter the market. So most of the foreign institutions, they are bullish on India, but due to very high valuations, they are right now staying away, and they're staying away from our market. When valuations comes down, definitely they will turn into aggressive buyer. And whatever we are seeing in the daily FII sell data, that is mostly related to ETF selling, because India is a part of emerging market index. Suppose if emerging market index some redemptions comes, means they have no way, they have to sell the stocks in India also. Like that, emerging market passive selling is coming in our market. That is why we are seeing some sell figure in our markets. But most FIIs, they are positive on India's long-term story, but staying away because of very high valuations. And the data, whatever we are getting on the ground level, the reports we are getting on the ground survey, and all indicate that our economy is doing very well. The only question is how long it will do well, because RBI too has hiked the interest rate very sharply. There's those who are paying EMI, they have to pay higher EMI because of high interest rate. For example, those who have taken housing loan, their EMI has gone up by around 15% when what they were paying 6-8 months back. And suppose if they could not able to pay the higher EMI, means they can continue with the existing EMI, but period will get elongated. For example, someone who has taken 20-year loan, now they have to pay for 24 years. 4 years they have to pay extra money for the same loan, in order to pay the same EMI without hiking the EMI. They have to pay the same money, means they have to pay for 4 years further. So the RBI interest rate hike, banks have passed on mostly to the those who have taken loan. So after Diwali only we will come to know whether the active domestic economy will continue its momentum, or it may slow down a little bit because of higher interest rate. That will be knowing only in the month of November and December, and more from the month of January after the Christmas is over. Most of the travel and tourism used to happen in the month of December only. So from January onwards, we will come to know whether the momentum in domestic economy continues. The other thing is that the crude oil price is extremely volatile. Every month we used to discuss about the crude oil, mainly because for us it is very important, because of most of the current account trade deficit happens mainly because of the crude oil imports, very high crude oil imports. And if price is high, means we have our trade deficit used to go up. Right now we are running the trade deficit between 25 to 30 billion per month. 2 months back it was 30 billion. Now recently crude oil price fell little bit. There was some slowdown in the import, and that is why now the trade deficit has come to 26. So crude oil price is very important for our trade deficit. And if you see that crude oil price after falling to $84, now again it has come to $97, and extremely volatile, going up and down very, very sharply in a short period of time. That is happening. And one of the most important phenomenon what I am witnessing across the world is the producers of commodities. They are looking for profits more than the volume. That is what happening across the commodities throughout the world. 2 days back, OPEC has decided that OPEC Plus, which includes Russia, they have decided that they want to reduce the crude oil production in order to keep the price firm. That is why the price has jumped very sharply from $87 to $97, mainly because the OPEC Plus, the crude oil cartel, the producing cartel, they have decided to reduce the production in order to keep the price. In crude oil, it is happening. Two days back, one textile association person came in TV, and he's telling that most of the spinning mill are running at 50% to 60% capacity throughout India. And what he is telling that 10 years back, this was not the phenomenon. Mills used to run at full capacity. Mills used to run at full capacity. Even though they make loss, they will buy cotton and they will run the factories. But that is not the phenomenon now. If the demand is less and if the price is not suitable for them, means they are reducing the capacity utilization. And right now the spinning mills, due to weak demand from US, they are running at 50 to 60% capacity only. And this phenomenon of sacrificing volume growth for profits, that is seen across the industries, and it is seen across the countries also. And the main reason for that is that most of the commodity run companies, their balance sheet has become very strong, so that even if they run at a lower capacity utilization, they can withstand. So they don't want to make loss, and they want to run only for profit. That is what I'm seeing across the commodity manufacturers. And in the last 3 weeks, last time we had on the third Saturday, we had the meeting. And if you see that Nifty and Sensex were down by 1%, whereas mid-cap has gone up by mid-cap also marginally down. Actually, mid-cap index also down. I have wrongly put it as plus. Actually, mid-cap index also negative, whereas small cap, it is flat. And though indices hasn't made much move, what we are seeing is a lot of action in the broader market. A lot of themes were going up. Defense theme were going up, and 1 month back paper stocks were going up. Like that, lot of packets of themes and stocks were going up, which are giving good opportunities to the short-term traders, those who are doing those who are long-term investors. They are also getting decent benefit because of this move. Initially, I told that government PSU shipbuilding companies, they have all done well. Masugan Dock, which we recommended 2 months back at 300, now it has become 650 rupees. So more than 100% up in the matter of within 40-50 days. Similarly, Gordon Rich also done well, where we have recommended to most of the clients, when the right from 120 rupees, we have recommended till 300 rupees. That also has given very good return. So those who have holding these stocks, they have benefited a lot in the last 1 month. So this is about the domestic economy. See, generally the festive season for in our country starts with Onam. From September onwards it starts. It will go till December. September Onam, October Onam and Vinayak Chaturthi will come on September. In October, Diwali function will be there. Then in December we will have Christmas. So during this for 4 months, generally the action among public will be very high. People used to spend a lot of money. They go for tours and they go for a lot of shoppings. And it will be generally a very hectic month for our economy during that time, September to December. September, these 4 months, and the bank used to lend a lot of money during that period. People take loans to buy their two-wheelers, fridges, washing machine, like that. Lot of consumption activity happens during this auspicious periods, which starts from September to December. And in Onam in Kerala, it was extremely good. It was very live, and even in our office also, we celebrated a lot during this Onam festival. And my reaction was that while seeing the Onam celebration in our office, this is one of the best celebration we had it since I joined in our office. So like that, most of the feedback I got from other offices also, where people were celebrating a lot, people were spending a lot of money to buy new clothes, and ground level indicates that the festive season which is going on was extremely good, and most of the public are spending a lot. And in shops, we are seeing very high turnaround, where people are buying a lot of things, and there were record bookings through online also, and courier companies could not be able to deliver on time. Like that, lot of very positive feedback I'm getting from the ground level. The actions happening on the happening in our country. Hotels are fully booked. Even yesterday, one of my relative came to Trivandrum to for a 2 day sightseeing. He has booked a hotel very far away from a railway station. When I asked him why you booked very far away from railway station, I asked him. He told that all near the railway stations and in the main places are fully booked, and he could not able to get any hotels near railway station and near town, and that's why he booked the hotel far away from here. He said like that. I got many feedback that hotels are fully booked, the resorts are fully booked, and people are going for tours and spending a lot of money, and because of this we are going to see that domestic economy related companies will do well in the Q2 results, and most probably in Q3 results also, because of very good action happening here in our country. And the other thing is that our corporate balance sheets are very strong, and one of the example where we can get is that CRISIL rating. Everyone will be knowing it, a company called CRISIL, which is a rating company owned by Standard and Poor of US, and they came out with one report 1 week back. In that report, they are saying that they used to upgrade companies if the balance sheet has strengthened and if their position has gone, financial position has gone up. They used to upgrade companies, and they also downgrade the company if the financial position is weak, or their cash flows are in stress, means they used to downgrade it. So in the first 6 months of current financial year, from April to September, for every downgrade of a company, there are 5.52 times upgrade is there. That means there are more upgrades than downgrades, which means that companies are doing well, their balance sheets are getting strength. That is why they are doing upgrade, and because of higher upgrade means the balance sheet has strengthened a lot. And the reason why they have told for more upgrades and downgrade is that the strengthening domestic economy has benefited a lot of companies, they have said, and most of the companies balance sheet has become extremely debt light balance sheet, and many companies are debt free. And mostly in commodity space, in the last 2 years, most of the companies have made bumper profits, especially in steel sector and all, where they have reduced a lot of debt, and that has made them debt light balance sheet. And similarly, higher realization in many sectors due to inflation and supply disruption, that also helped a lot of companies, and these three has made them to leading to rating upgrades. That is the reason they have told. So on one side, that a lot of consumption is happening, on other side balance sheet strength has increased a lot. That is why we are seeing more upgrades than downgrades, and that means that overall companies are doing well. And if you see the GST collection, it is also well above 1,45,000. Consistently, it is going up. And from next month onwards, I am expecting that it will comfortably, the GST collection will comfortably go above 1,50,000, because the GST is usually a 1 month lag data, and the festive season started from September only. So September collection will get reflected only in November, and from next month onwards, I'm very sure that the collections will start increasing, and it will be well above 1,50,000. And the other important thing which we can tell is that the monsoon which has ended, the southwest monsoon, which is the period of rainfall between June and September, from June 1st to September 30, which is our rainfall season for our country. We get most of the rainfall throughout our country only during this period, June 1st to September 30, and it is extremely happy to say that for the 4th consecutive year, our rainfall has been good, and this time it is above normal rainfall. Any rainfall which is above 105% on a long-term average basis, if you compare, means it is an above normal rainfall. And this is the rainfall which we have in the below table. No, you can see that last 6 years rainfall, which is the percentage departure from long period average. And if you see that in the last year it was +6, and before that it is -1. 95 to 105 is termed as normal, and last year was a normal rainfall, -1 we had it. Whereas in 2020 and 2019, our southwest monsoon was 10 and 9%. This 10% is termed as excess rainfall, and 9% is normal, above normal. And to 2021 it is normal, and 22 it is above normal rainfall. And 4 years of consecutive excess and above normal and above normal rainfall, which is very rare in the history. If you take last 100 years, means most probably 4 or 5 times only we have got this consecutive 4 years of good monsoon. And this time we are gifted with this, because in Europe and all we are seeing that there are a lot of drought there. But this time we have got very good rainfall for the 4th consecutive year, which will be very helpful for our agri production. And only slight negative in that is that the distribution is slightly skewed. Some of the main areas like Bihar, Uttar Pradesh, and there's Gangetic, lower Gangetic areas, and all the rainfall was lower than normal. And apart from that, overall we have got a very good rainfall, which will be very helpful for Kharif crop as well as for the Rabi crop, which is going to start from October onwards. And this is the reservoir level, water in the reservoir level throughout our country. And if you see that the overall reservoir level is at a very healthy level. If you take all India level, the 10-year average is used to be 75% of reservoir level, and last year it was 78. Now if you see that it is almost 88% of the overall reservoir level, which is almost 18% higher than last 10-year average. That means the water levels are very comfortable. And if you see most of the areas, it is well above the 10-year average. Only East India, the water level has been slightly lower than 10-year average. If you take other areas like Northern India, it is good. Western India, it is very much comfortable. From 73% of 10-year average, it is 95% now. Similarly, if you take southern part, where the 70% is the average reservoir level, whereas now we are seeing we are having 92%. So the reservoir level overall is extremely comfortable, and we expect that the Rabi crop will be very, very, very good. Kharif is good, and Rabi are also expected to be very good because of very comfortable reservoir level. So the monsoon will definitely help us, our economy, especially the rural economy. Crude oil extremely volatile. If you see in 22 year, it went up very sharply to $120, and it fell to near to $80. Now again it has come to $95. Actually, yesterday closing was $95. This was taken yesterday morning, this chart was, and it is around $95. So extremely volatile. On one hand, there are talks of recession, which means that the consumption of crude oil will come down. On the other hand, there is supply disruption due to Russia-Ukraine war, as well as the OPEC production loss. So we have to see what will happen. I expect that the crude oil will continue to be very volatile. It will go up and come down very sharply, and it will be extremely difficult to forecast the crude oil price. This is a very interesting chart. See, most of the companies, if you see consumption-based companies which are listed in our country, if you see, means the valuations are extremely high. Nowhere in the world you can see this type of valuations. For example, the footwear companies, there are three listed companies which are listed many years back, and recently 2-3 companies which were listed now also. Very recently in the last 4-5 months, if you see, most of the companies, they are trading at around 100 PE. If you leave aside companies like Mirza and Liberty, and if you take the Relaxo, it is trading at 100 price earning ratio. And recently listed companies like Campus and Metro, which are more in the footwear business, they are also trading at a very high valuation. And like that, now many consumption based companies, the valuations are extremely high. Jubilant Food and the QSR type companies, if you see that the valuations are extremely high. And one of the reason why such a very high valuation given is that that the consumption story in India has just now begun, because the income profile of the country is going to see significant changes in the next 5 to 10 years. It already started changing it, and it is going to see more changes in coming years, because the younger population, they have started earning, which means that they will go to a higher bracket of income, and when more income means more spending. And if you see that they spend more on the QSR type of companies, which will be beneficial to QSR type of companies, the footwear type of companies, like that, their spending pattern will benefit companies which are in a telecom sector, which are in mobile. This type of company used to get benefit because of that. And the important chart which I have slide, you can see it here. In 2005, the lower income group, which is less than 2.5 lakhs, was 15 crore, which constitute 69% of household, and lower middle 5.1, which constitute 23, and this is the upper middle 7%, and higher middle class just 1%. In 2018, the lower end of the pyramid, that has shrunk from 69% to 43%, and lower middle class from 23, it has gone up to 33, and upper middle class from 7%, it has gone to 21%, and higher income people from 1% to 3% among the households. On one hand, the household, the pie itself is increasing. On the other hand, the income profile also increasing. And in 2030, that is another 8 years down the line, the lower income percentage is going to come down from 43, which is in 2018, to just 15%, and lower middle income from 33, it will remain the same, whereas the upper income now, upper middle class, from 21%, it is going to double in the next 8 years, from 21 to 44, and the higher income also going up. So the upper level of the pyramid is going to expand a lot, and the bottom level is going to shrink, and the entire pie itself is shrinking. The overall household now, from 21 crore earnings household, from 21 crore, it is going to it has gone up to 29 crore in 2018, and again going to 38 crore in 2030. So the entire pie itself is expanding, and in that pie, the upper middle class and higher income level is going to go up very sharply, which will benefit lot of consumption based companies, because their spending is going to be in that. And that is why you are seeing such a very high valuation for the companies, because what they are feeling is that 10 years down the line, their income is going to go up very sharply, and that is why we are seeing such a huge valuations given in that company. And we also believe that many consumption based companies is going to benefit from that. On one hand, the entire pie is increasing. On the other hand, the another important thing is that the consolidation is happening in many industries. The smaller players are could not be able to face the competition, they are closing down, and bigger players are becoming bigger and bigger. So it will throw a lot of interesting opportunities in coming year. Only thing is that we have to buy these type of companies at a very high valuation. So that is the only negative. So the opportunity is extremely high, very high. So these are the main things where we are where I have told about the domestic economy. Whereas if you see the global economy, it is on a very weak wicket. If you segregate the world into US, Europe, and other part, if you see that many parts of the global economy, including India, the rate hike has gone up. Sharp increase in rate hike has happened, especially in developed economies. And if you see that the percentage hike is very sharp, from 0% to 2%, 3%, 4%, means the percentage increase will be extremely sharp, and this is going to affect them a lot. Already we are seeing that in US and Europe, the housing sector has badly hit. That is the first sector which has badly hit by the interest rate hike. And the second thing is that the energy prices has gone up very sharply due to Russia-Ukraine war, and gas prices, natural gas prices has gone up very sharply because of very high energy inflation. Many countries are facing a huge problem, especially in European countries, and people are suffering from paying very high power bills, and they have to reduce spending in some other area. See, we know that most of these US developed countries, no, they don't have the saving habit. That means whatever income they are getting, they used to spend fully on the month itself. And if the crucial spending gets higher, means for example power bill goes higher, means they don't have surplus money to pay the higher power bill. So what they will do, they will cut spending on other non-discretionary item, which means that area will get affected. So EMI will go up. That means that is one additional burden. Then energy prices has power bill and fuel for the automobile has gone up, and that is another burden. So to compensate that, they don't have other income to compensate the higher expenses. Instead, what they will do, they will cut spending on other items, and that has slowed down a lot, and it will definitely push towards inflation to many parts of the world. Only country which hasn't hiked the interest rate, still continuing with a very low interest rate, is the Japan. Japan hasn't hasn't hiked the interest rate till now. That is why you see that Japanese yen has depreciated a lot, mainly because the interest rate difference between Japan and other developed economies, US, has widened a lot. That is why the Japanese yen has depreciated than most other currencies. And China, the other big economy, and you are seeing that they are seeing on and off of lockdown due to COVID. Even some few cases comes, means they are locking down that area, and that is pushing down their economy. And the other very big important news where we are not hearing in public is the real estate stress we are seeing in China. Chinese real estate is far bigger than US, and they are the biggest consumer of many metals, and both ferrous and non-ferrous. And we are hearing a lot of news that there is a huge stress in the Chinese real estate, and the housing sales has come down a lot when compared to last year and before that, which means that Chinese real estate market is in huge stress. So globally, the major economies, Europe, US, and China, is not looking good, which means that it will definitely affect the global economic growth. And if you see in the last 1 week, one after one institutions, they are pushing down the global economy growth to lower level. Yesterday, World Bank has reduced the global economic growth further down, and we are hearing a lot of big institutions like World Bank. They have cut their growth guidance for the global economy for 2023. And this is the US Fed rate hike. They are very aggressive in rate hike. What we are expecting is that now the next meeting is on November 1st and 2nd. Yesterday's job data was extremely strong, and which means that another 75 basis point hike Fed will do in the month of November first week. Then the last US Fed meeting will come in mid-December, December 15 range. And in that, we are expecting another 40 to 50 basis point hike. And in January, another rate hike is expected. So overall, what we are feeling is that US Fed will, in current rate hike cycle, another 3 more rate hikes are there. One will happen in the November, and another one in December, and one in for early 2023. And with this, we are expecting that the current rate hike cycle will come to an end, and the US Fed rate will stabilize around 4.5 to 4.75 level, which is around the pre global financial crisis peak. Most probably they will keep it there, and they will wait for further action, either to reduce or to increase. They may pass around that level of 4.5 to 4.75 level, and they wait for a few more months, and according to the economic condition and inflation data, they may take further action. Either they may reduce it or they may further increase it. Will depend upon the data which we are going to get in the first half of FY23. So because of sharp increase in rate hike, definitely the housing sector will get impacted, and the next is the auto sector, and consumption will get impacted in US. And as well as because of sharp rate hike, the global liquidity will also get adjusted. It will move from emerging markets to developed markets, because whenever rate hike happens, means the US bond will become attractive, and some of the money will go to fixed asset class also. So some adjustment will happen. And I told that because of rate hike, high inflation, and China stress in real estate, the Russia-Ukraine war, global economy is going to affect. And this is one of the very interesting chart. It has been this is a chart taken from Kotak Economics Research, and they have plotted the recession probabilities throughout the world. And if you see that most of the European countries, there is a very good possibility of recession in 2023, and they are telling that Germany, which is the worst affected country among big economies due to Russia-Ukraine war, because Russia has completely stopped supplying natural gas to Germany, which is a highly developed economy, and it is the fourth largest exporter. And when power prices, energy prices goes up, means the competitive strength will come down because of a higher cost of production through alternate source that they are buying, and because of that, their export may get affected. So the German, there is almost 75, more than 75% possibility of going to recession. Similarly, Italy, the overall Eurozone, UK, France, all these have more than 50% chances of going into recession next week. US, the chances is 50%, and Japan 30%, Brazil near to 30%, China 20% possibility of going into recession next year. And what is more interesting in this chart is that India, the recession possibility they have given is 0. The probability for India going to recession is 0. That is what they have given. Let's see how it pans out. And this is also a very important, very interesting slide, which I have taken from a Kotak mutual fund presentation. Most of the data were taken from there, and from Bloomberg also some of the data has been taken. And this slide, if you see that, just you focus on the last two lines, that increase in central bank balance sheet and increase in aggregate debt to GDP ratio between 2008, which is the global financial crisis which came in 2008. Maybe those who are in the market for last 15-20 years, they will be knowing the 2008 crisis. And from 2000, it was very important, because most of the market fell, more than 50 indices fell by 50%, and mid cap and small cap fell by 60-70%, and individual stocks, many stocks fell by 70-80% during that time between 2008 and 9. and it took 3-4 years for the market again to come back. Only in 2013, the market which fell in 2008, it took almost 4 years, 5 years to bottom out. In 2013 only, India again started going up. In US from 2012 onwards started going up. So most of them used to compare this 2008, a very bad experience. Most of the investors had it. That is why if you see that whenever a recession word is heard means immediately people will start telling that that 2008 like crisis is going to, we are going to see. People immediately will start comparing with 2008 crisis, and they will tell that we are going to see 2008 like crisis. So if you see the last two lines data, if you see that increase in central bank balance sheet between COVID, that is in 2020 when COVID came, most of the global banks, they flooded their economy with a lot of liquidity in order to face the COVID crisis. And if you see that India too done some stimulus, but our Indian central bank balance sheet has gone up by just 16% between the COVID time and now. Whereas US, if you see that the balance sheet has gone up by 114, UK by 90%, Eurozone by 55%. US simply gave money to their citizens. At least in India, we gave food grains to the to the citizens where people can use it for a living. Whereas in US, the government transferred $1,500 to most of the citizens in their country just to face the COVID crisis. And many people spent that money many people speculated in stock market cryptocurrency with the money given by the US government freely. So, and the US debt, if you see that from it almost doubled from between COVID time and in 2 years, in between 2020 and 2022. In the last entire history, US took keep on borrowing it. From entire history till 2020, US had almost 7 trillion of debt, and in 2 years between 20 and 2022, the debt almost doubled. So whatever US government took the debt from 2022 till the history of US, and from 20 to 2022, if you see that it has doubled. In 2 years, debt was equal to whatever debt they have taken previously. Like that, US has taken debt to face the COVID crisis at that time. And similarly, UK debt also gone up, Eurozone debt also gone up. And if you see, Indian debt is relatively less when compared to the other countries. Similarly, our debt to GDP ratio, you see, it has actually come down between 2008 to 2022. Whereas in US, it has gone up by 49, UK 54, Eurozone 147. Now, if recession comes, means what is going to happen? The GDP again going to shrink, which means the aggregate debt to GDP ratio again going to go up for many countries like US, UK, and the Eurozone. So when you compare with other countries' balance sheet, our country is relatively looking far better. Moreover, the inflation, the inflation which we are going to see in US, UK, and Eurozone, it is going to be very sticky. It is not going to come down very sharply. Gradually, only it is going to come down. That is why the US Fed is very aggressive on the rate hike. Whereas if you see our country, since we expanded balance sheet to a manageable level, our inflation hike will be moderate. Whereas some of the countries like US, UK, and Eurozone, their inflation gone up very sharply because of the very high debt they have taken and expanded money very sharply. So this is one very important slide. What it indicates is that we are relatively better than most of the countries. So this is the export data. As I said that global economy is not doing well. So the first data which will get impacted if global economy slow down is the export data. And if you see that from the March onwards, this is the monthly exports data. From 42 billion, it has come to 32 billion. Every month, we are seeing a sharp fall in the export data, particularly in the last 4 months. If you see from 40 billion, the exports started coming down. They mainly because the slowdown in the global economy, and if you see the two-wheeler exports, Bajaj Auto and TVS Motor, where they export a lot of motorcycles and three-wheelers to foreign countries, their exports also has come down a lot, and this clearly indicates that global economy is in a sharp slowdown. Rupee, yesterday it has hit to 82.4, 82.3, and it has been continuously depreciating. And one of the main reason why Indian rupee has been depreciating is because of high trade deficit we are having. Actually, our rupee should have depreciated a lot even before, but RBI, they spend a lot of money to make the rupee depreciate orderly, and that is why our rupee hasn't fell in line with other currencies so sharply. Now there was a news that 1 month back was that Indian bond may be added to JP Morgan bond index, and if that has added, means India would have got around 30 billion worth of foreign money in that. But due to some issues and conditions foreign investors are putting, which was not acceptable to RBI and our government, it was not added. The Indian bond was not added in JP Morgan index. That means that 30 billion inflow, which should have come in next 2-3 months, that is not going to come. That is why if you see that last 2 days, you can see that there was sharp depreciation in our currency. And the justification given by our government RBI is that globally all currencies are depreciating against the US dollar. We have depreciated less. So we are far better than many countries. That is what they are justifying the rupee weakness. And this is one example where between January to September 28, the more global currencies against US dollar. If you see that Swiss franc has depreciated around 6%, whereas Indian rupee has depreciated by 9%. Chinese yuan more than 11-12% it has depreciated. Euro near to 15. South Korean won more than 15. British pound 20%, and Japanese yen more than 20% it has depreciated. I told that Japanese yen, why it has depreciated is mainly because the Bank of Japan did not hike the interest rates. They want to keep their interest rate low. So the interest rate differentials between Japan and US has gone up a lot, which is making that currency to weak, extreme, very high. And British pound, we all know that they are having their own issues. That is why it fell more by 20%. And in that chart, if you see that India hasn't fell relatively much when compared to even countries like China, Chinese yuan and euro. And one of the reason why Indian currency did not fell in spite of very high trade deficit, historically very high trade deficit, is that RBI sold a lot of forex reserves. Almost 100 billion they have spent it. Not all has been spent for supporting the rupee. Almost from 640 billion. Yesterday, forex reserve for our country was around 532. Just in November-December period, we had 640 billion worth of forex reserves, whereas now we have only 532 billion. That means almost 100 billion worth of foreign reserves has come down, mainly because the trade deficit has increased a lot. The second thing is that our foreign forex reserves will mainly build through capital flows. It's not like a trade surplus we have built our forex reserves. It is mainly through capital flows through foreign institutions and through FDIs. Only we have built our forex reserves because we are a current account deficit country, and that has been balanced out through capital account flows, and because of surplus capital account flows, we have built our forex flows. And if you see that last few months, the foreign institutional investors has been selling our stocks. They are taking away money, and that is why the RBI is giving them dollars, because foreign investor which sell $1 billion worth of dollar, if they go direct to market, means rupee will weaken further because of a high need of dollar. Instead of that, RBI is giving that money to the say selling dollars to the foreign institutions, so that the demand for dollar will not come into the market. So because of doing that, lot of almost 100 billion worth of foreign reserves has got evaporated. And another interesting thing many are asking is that generally, if you see that whenever rupee weakens, it used to help exporters, especially IT companies, textile companies, like that, because whenever rupee weakens, means they will get additional money in dollars. For example, suppose if they sell a t-shirt, a Tirupur exporter sell a t-shirt at $1, means last year if you have sold the t-shirt for $1, means he would have got 75 rupees only. Now it is near to 82.5. Now the same t-shirt, if he export to US, means at the same price of $1, he will get 82 rupees. Almost 10% he is getting additional income in rupee. That means any rupee weakness, it used to help the exporters. But this time it is not going to be like that. It is not going to help all the exporters. Only select exporters only it is going to help. Because I told you, no, and in this chart you can see that actually rupee has weakened against dollar, whereas rupee has strengthened against many currencies. For example, rupee has strengthened against euro, where many textile companies used to export to European countries. They will all lose money they will all lose money because rupee has strengthened against euro. Similarly, against Japanese yen, if you see that rupee has strengthened against Japanese yen, against British pound, against Chinese yuan, rupee has strengthened. That means a exporter food exports to US, he will definitely be in a very positive position because rupee has weakened against US dollar. Whereas since rupee has appreciated against many other currencies, they will all lose in that. For example, an IT company, they do business throughout the world, but the main business comes from US only. Whereas a IT company like TCS, the US business is around 50%, whereas companies like HCL Tech, around 70% of business comes from US, and balance 30% for HCL Tech comes from Euro and other countries, that businesses. So 70% of that business will benefit from rupee weakness against dollars, whereas the balance 30%, in some of them they may lose it, because in 30%, maybe 10 to 15% may come from euro, where they will lose it. And so the entire benefit of 70% they are not going to get. A part of it will get compensated by the loss they are going to make in other currencies like Japanese yen and euro. And that term is called cross currency headwind. Because of various currencies movement, one currency has appreciated, one currency has depreciated. So net we have to see, and if you see that most of the IT companies are net will be benefited from current rupee weakness, but they won't benefit like what generally the rupee used to get weakened 3 years back, 5 years back, or in 2009, like that. Because at that time Indian rupee weakened almost against all currencies, whereas now Indian rupee has weakened only against a dollar, US dollar. So Indian exporters is not going to get full benefit of rupee weakness. So while buying companies, we have to see how much they are exporting to US, how much they are going to export, doing export against Europe. Suppose a company is doing 100% exports to Europe, means actually they will be losing money in spite of rupee depreciated against US dollar, because rupee has appreciated against euro. So a company which is exporting to Europe alone means most probably they will be losing money. So we have to see on a company specific basis, we have to do analysis, and some of the companies, shrimp based companies and all overall will get benefit from rupee depreciation. Similarly, IT companies, even after factoring cross currency headwinds, they will be benefited from a rupee weakness. Whenever the forex reserves fall means Indian import cover also comes down, and if you see that the Indian import cover, which is nothing but the money forex money needed divided by the total forex we have, foreign reserve we have divided by forex money needed. If you divide means you will get the import cover, and if you see that it has come down very sharply, and any further fall in reserves means again it will come down and it will take to 2012-13 level, which is the where we had the current account deficit problem. At that time we had it, like Sri Lanka, which faced which is facing now for the last 2-3 months, because they don't have adequate forex reserves for the import cover, which led to further sharp depreciation of the rupee. At present, we don't have any panic situation, but any fall in US, any foreign forex reserves below 500 billion means then RBI will become slightly panic. That's what I feel. FPI flows, if you see, till date, till October 4th, almost 7.7 billion they have sold. Last year, they have sold 18.4 billion, and most of the selling came from October onwards last year. Secondary market selling, from October onwards, they were consistently selling. July was nil. August, 6 billion they bought, and September, again they have sold, minus 0.9 billion they have sold it. In October, it is almost flat, almost zero, October till yesterday. So FIIs, they are very cautious. See, most of the selling comes from passive investment. Whenever the emerging market ETF is seeing adoption means naturally Indian FIIs will sell in Indian markets also. So now Q2 results are starting, and if you see that from Monday, IT company TCS is going to come out with results. Monday post market hours, IT company will come out with result. IT company is a big underperforming index in our market for the last 6 months, and many portfolio managers, fund managers, they are extremely negative on IT, and even some of them are who talked very positive about IT sector few months back. He is telling that he has zero exposure in IT stocks. So Monday, the positioning is extremely light in IT sector. So Monday we have to see how TCS announces results, what is their commentary, and especially when rupee is weakening time, generally IT sector used to do it. So as a contra investor, one can take some position in IT stocks because valuations has come down. Many stocks has fell by 50%, 40% like that, and even if it doesn't goes up, the downward risk I feel is much less in IT. Let's see what TCS presents. Other sectors, banks and NBFC to show very good performance. Banks, the credit growth is almost 18-19%. Good banks are showing credit growth near to 19 to 20-25%, like that they are showing it, credit growth. And similarly, NBFC also credit growth is less. Credit growth is very good, credit growth is there, and we feel banks and NBFC will show good results. Pharma, I am expecting some improvement in happen. In pharma, we have to be extremely stock specific. You cannot buy the entire basket, but if you pick a correct stock, you will get very good return in pharma stocks in the next 6 months. Metals, we expect the peak profit of metal is behind them. Previous quarter also the profit has come down, and we expect the Q2 also we expect further fall in profits. Consumption based companies, most of them will show decent performance. So this is the Q2 results expectation. And team to watch pharma. I feel some good opportunities are available. Pharma you should not see as an entire sector. You have to be stock specific, because pharma we can divide into 4-5 parts. It's not a homogeneous sector. You can divide into 4-5 parts. Indian formulation is one business. US generic is another business. Then API business is there. Then you have CDMO, contract manufacturers. Like that, you can divide pharma companies into various parts, and you have to be extremely selective in that. And if you pick the correct stock, means I expect that you can make decent money in pharma stocks. Raw material prices, which was very high, it has come down, and that will boost the margin of most of the pharma companies. Moreover, if you see that US FDA inspection has started, which means that the companies will get more approvals, and they can launch more product in US. And US FDA inspection, we can take it as a positive as well as negative. On positive side, that companies will get more approvals, and which will lead to more launches. On negative side, if you see big companies with regulatory complaints, that may lead to some action taken by US FDA. And pharma sector, yeah, again you have to see a stock specific. You should, since it is not a homogeneous sector, and individual, if you pick correctly, means the next 2 years you will get very good returns. And events, geopolitical events, we have to watch FII flows, and most importantly the Q2 results we have to watch. Now result season has started. Will start from Monday onwards with TCS announcing its results. And I expect that domestic related companies will post decent results in current result season, and banks and NBFC also will post good results, and we will see it how it performs. Now we will go into recommendations. So these are the 5 stocks we are recommending. My feeling is that all the 5 stocks will do well in the next 6 months. I have a lot of conviction in these stocks, all the 5 stocks. I expect it will do well. The first one is the Power Grid. Actually, Power Grid is a very defensive company, but suddenly what happened was that in the last 1 month, there was a news that Power Grid may buy REC. Right now, the promoter of REC is the PFC. So by paying money to PFC, Power Grid will buy the REC stake, and it will become subsidiary. And this was not taken like that. The one news was floating in the market. This was not taken positively by the market, which led the stock price to correct from 240 to 190 level. But now government has denied that they are not going to do that. Power Grid is not going to acquire REC, categorically told, which means that I feel that Power Grid will gradually go up from current level of 209 to again 230, 240 level. It's a high dividend paying company, and one can buy it using the current correction opportunity. One can buy a Power Grid. The second stock which we are recommending is the Zydus Life, which is the old Cadila pharmaceutical company, and we have recommended this company many times. Actually, the Zydus Life, the price went to 550, 600 level 2 years back, where they got approval for launching the vaccine, the COVID vaccine. But what happened was that the approval came very delayed, but they could not able to capitalize the COVID vaccine. Only Covaxin and Covishield, these two companies utilize the opportunity. But Zydus Life, due to extremely delayed launch, they could not be able to capitalize the COVID vaccine, which led to a sharp fall in their stock price from 600 to 300 level. Now price is again going up. Why I am again and again recommending Life is that price has corrected, where the valuation is very attractive. Second thing is that 2 years back, they sold their animal life business last year. They sold their animal life business for decent money, which made their balance sheet net debt as positive. They don't have debt now. Net debt is a cash surplus balance sheet that Zydus Life is happening is having now. The third one is that if you see the last 1 month, if you see that last 2 weeks to 1 month, they have got 3-4 very high value approvals in US. Very high value drugs where they have got approvals, and I feel that the third quarter and fourth quarter will be very good for Zydus Life because of the launching of high value drugs in US. In US, Zydus Life has a very huge business. Out of 4,000 crore revenue in the Q1, almost 1,500 crore came from US business only. Then they have the next largest business is from a domestic business, which is also doing very well. Then they have the API business they have. Then their subsidiary, Zydus Wellness, which is the consumer business, which have brands like Complan and Ever Youth, sugar free. That is also doing well, Zydus. And if you say that exposure in other countries is very less, and rupee weakness is actually benefit this Zydus Life because they don't have much business on the other parts of the world. Only US they are having huge exposure. That means only in US dollar they will do business, and any weakness and recent weakness in rupee against US dollar will benefit a lot. They benefit a lot for Zydus Life, and the cross currency impact will be much less for Zydus Life. That is why we are recommending this pharmaceutical company Zydus Life. And third one, Better Food. Previously also we have recommended, and if you see that SBI Mutual Fund, they have taken almost 8% stake in Better Food, and they previously they were focusing only on North India, their products, NCR region like that. They were focusing their product. They were manufacturing biscuits as well as other bakery items. In bakery items, they are the main supplier for McDonald's, where they supply bread, bun like that. Like the type of bakery items, they have US FDA approved plants. That means their quality is very, very good. This indicates. And biscuits also, they have, they are manufacturing it. And when I went to the showroom here in Trivandrum, in Pothi's shop, I saw Better Food product. I bought 2 biscuits and I distributed in our floor, and I just checked how was the quality. They said it's good. That is what the feedback I got from my colleagues on the quality of the biscuit they manufacture. But when I see the packing is not that much attractive, but biscuit quality is relatively good when I checked the quality of the biscuit. And SBI Mutual Fund, they have taken almost 8% stake in that, and one can buy this Better Food. And the fourth one is the Avanti Feed. Many times previously we have recommended this company. They are mainly in feed business as well as shrimp exports. The feed is used for feeding the shrimps, and the main raw material for shrimp feed is 3 items. One is the soya de-oiled cake. The second one is the fish, and third one is the wheat. And second one is the fish meal, and third one is the wheat. And if you see that in the last 1 month, one of the main raw material, the soya dock price has fell by almost 20%, which is very positive for Avanti Feed, because last 2 years they were suffering from very high raw material prices, especially these soya dock prices. Now, because of very good supply due to good monsoon, the production has gone up in soya dock. Soya bean production has gone up, which means that soya dock supply also will go up very sharply. The price has already started seeing it. Almost a 20% fall was seen in soya dock prices in the last 1.5 months. And then and if you see that the second important thing is the fish feed, fish meal, that price also has come down. and we feel that it will be positive for Avanti Feed. From the third quarter onwards, second quarter, it won't so much impact, but from third quarter onwards, their margin will start going up, and company will start showing very good profits. And the fifth one is the Precision Wire. Many times we have recommended it. Again, we are recommending it, and I expect that when electric vehicle and all coming means the usage of wire, copper wire will go up, which will benefit the company. So these are the 5 recommendations which I am giving it, and clients can safely buy this company. I have personally invested in most except Power Grid. I have invested in these companies, and many not now, many years back I have bought this Avanti Feed and Precision Wires, and I am holding for last many years. Vector Food I bought it a few months back, and Zydus Life also I bought it few months back. I have positions in these 4 companies: Zydus Life, Vector Food, Avanti Feed, and Precision Wire. I intend to hold it for a few more years in all these companies. And this is the September review. September review unfortunately did not did well. The main culprit was the Canfin Foams. Exactly after we gave recommendation, the CMD of that company resigned, which led to sharp fall in that. And Canara Bank, which is the promoter of Canfin Foams, they are searching for it. Because of CMD exit, the price has come down. I feel all the 5 companies will do well. JK Paper will do very well. Sumitomo will do well. Federal Bank also will do well. So all the companies one can hold on and even can add further at current levels, because prices has corrected, and we expect all the 5 companies will report very good results in coming result season. So that's it for in current presentation.